What's up, Zach's Live Trader subscribers? Here with you always, Dave Bartosiak, the bearded boy wonder, and we're going to go through all sorts of options trades that we've talked about over the course of the last several weeks. Now, why am I talking so many crazy options trades today? Because we have December expiration coming up on Friday, December 16th. So we're filming this here on the 14th, which is Wednesday. Probably won't get out until after the close. And then you got all of Thursday, all of Friday to do whatever it is you may need to do. Now, the good news is a lot of these trades we basically already knew about. So a good chunk of this is going to be a review of things we've already talked about or trades we've already closed out for the most part. And then we still have two trades that are reporting after the market closes tomorrow, so I'm not going to be able to offer up much on them. That's the Oracle and the Adobe trade, but we'll still touch on them just so you know what's going on. And then if there is a trade that I haven't talked about in this video that I've talked about in the past, it's probably because it's so far in one direction or the other where you can't do anything, so it doesn't really matter. So if I forgot one, sorry, let me know. I know we've talked about Palo Alto Networks. That's one that's come up, but again, the market just went so far in the other direction where it was just like there's really nothing you could do on something like that. So just have your risk parameters set up great so that you don't lose your shirt or your suit jacket. No suit jacket today, guys. I'm fun and fancy free. All right, so we got a bull call spread on Foot Locker that we talked about before. This was long the January $75 call spread for a net debit of $1.95. Now, that's max profit with shares of Foot Locker above $75. Things have been very good over at Foot Locker. Now this spread is at $4.50. So I would not stick around. Don't stick around until January, okay? You got 130% profit here on shares of Foot Locker. Is it going to get a little better? Yeah, you're going to incrementally get a little bit better, another 50 cents out of this, but is it worth it to stick around for another 4 weeks? No. So just rip it onto the next one, all right? Speaking of going on to the next one, we've got Dish Network. The bull call spread we put on Dish Network, long the December 16th, 55.60 call spread, $2.05 net debit. Max profit with Dish above that $60 holler. What happened? The spread's at $4, ladies and gentlemen. So this again has gone ahead and doubled up for us. This is good. So over the next couple days, if you can close this out for 100% profit, that seems like a pretty good idea to me. So just go ahead and rip that. I think Dish is like 59 and change right now today. So who knows, man? Either direction, either or. Depends on what the market does. I know we got the Fed rate decision today during me coming in here. So I don't even know what happened, but I do have a hunch. Anyway, so that's Dish Network. Now let's look at Disney. A bullish call spread on Disney long the Jan 20 Disney 92.50 100 call spread for a $3.25 net debit. So the difference in the strike prices here is $7.50. And we paid $3.25, so our upside potential is going to be that $7.50 minus this $3.25. Now, the max profit's going to kick in with Disney shares above 100. Disney rocking and rolling. The spread is trading at $6.90 right now, so that's fantastico. What do we do here? Again, guys, close out, 110% gain on Disney, because all you're going to stick around for is another 60 cents. It's not worth sticking around an entire month for 60 cents. It's just not worth it unless you really want to. I mean, if you really want to see that, it will likely happen with shares of Disney. So another sweet victory. John Deere, DE, the bullish put spread. This one we talked about before, short the December 92.50.90 put spread for $1.08 net credit. Max profit with John Deere above 92.50. Spread's worthless, cashed in that whole $1.08. So victory again here, pocketing that $1.08 as Deere shares have rallied. And before I told you guys, just let it expire worthless for that max profit, which is good. So don't have to worry about this one either. Again, we still don't have to worry about it. It's likely to expire worthless in a couple days. Okay, now, Lululemon. Bullish a call spread on Lululemon. Went out to January, the 57.50, 62.50 call spread for $2.06 net debit. Max profit with Lulu above 62.50. Lulu's at 70, ladies and gentlemen. This spread is at $4.90, so it's really not going to get too much better than this because the stock is just so far past that 62.50. There's no turning back. So again, you don't need to stick around. Just go ahead and close this out for a sweet gain, 100+% gain on Lululemon. So that's another fantastic victory there. Okay, good stuff happening. Now, Sears. Premium, folks. You remember I was spitting all sorts of venom about Sears. And I said short the December 16, 13, 14 for 25 cents or the 14, 15 for 18 cents net credit. Max profit with Sears below $13 on the more aggressive one, $14 on the other one. Sears is under 11 right now. So both of these spreads, one of them's at a penny, the other one's at, who cares, 0. Max profit on this one as well. So I love it when I hook up a nice winner for you premium folks out there. So Sears is definitely a good one. And I even went on Bloomberg and I was talking about the 12-7 put spread going out to March, which was another one. So again, cash this out. Don't worry about it. And Sears, I mean, come on, man. Not going to Sears. It's over. All right. Next, Gilead. All right, so now is when it's going to get a little rough. Now, if you remember Gilead, there was a relief rally following the election on shares of Gilead. I was on a bear put spread long the December 16, 75.70 put spread for $2.66 net debit. Max profit with Gilead below 70 cents. Right now, the spread's down to 35 cents. It's not working. Gilead started rallying. In the previous video, I said close out the long side of this, so I hope somebody listened to me and closed out the long side of it, because if you kept it the whole time, this is what you're looking at, 35 cents. So if you are still holding it, you got to go ahead and try and get what you can for it. Try and get that 35 cents, something like that. But, that's the nature of the beast, folks. And there's going to be a couple of these that we're going to go through, okay, that aren't that fantastic. GameStop, a bearish put spread. I wasn't too bullish on this retail name. Long the December 16th, 24-23 put spread for a 58-cent net debit. Max profit with GameStop below 23. And it rallied. So it rallied in our face, and now there's no bid here on this put spread. So, again, anything you can get for GameStop. I don't think you're going to get too much, though. So that one didn't really pan out for us. But it was 58 cents. So, we make up for it. All right. Alta. Now, we were bullish a call spread on Alta. They had a fantastic report. We were long the December 16th, 260, 270 call spread for $4.50 net debit. Max profit with Alta above 270. The trade's at 40 cents now. Now, the day after earnings, Alta was way up at 270, and then it just never got back, and now it's down 250, 255. So if you can get this 40 cents for it, you can just go ahead and rip it. But the Alta trade ended up not panning out for us. What you gonna do? All right, so Ambarella. There's another one. We were bullish on a call spread on Ambarella. Went out to January here. Long January 60-65 call spread for $2.30 net debit. That's a max profit with Ambarella above 65 cents. And there was not much of a bid. There's just no bid here. As Amba shares have taken a tumble into the 50s. So previously, we did say go ahead and sell the long end of the trade, similar to the Gilead thing, okay? And part of the reason why I wanted to circle back with these, because typically I talk about it, I tell you go ahead, sell this, and forget about the other part, and then I just ignore it. But I wanted to circle back to show you guys that when I say close out the long end and let the other one run, you should close out the long end and let the other one run, because had you done that, you would have had a ton of money in your pocket compared to what you got now. You don't want to let these things expire completely worthless if you're long a call spread or a put spread or something like that. It's just not good. There's a big difference between taking a 50% hit and taking a 100% hit, okay? So if I see that and I say go ahead and close out the long end, try to close out the long end, okay, if you can. All right. Now, Smith & Wesson, folks. So a bullish call spread on Smith & Wesson. Again, December 16th, 24-26 call spread for a 78-cent net debit. The profits were with Smith & Wesson above 26. The earnings report came out, nothing. Garbage. The spread goes to 0. Again, get what you can for any of this, but you're probably not going to be able to get much. Sometimes you're the windshield. Sometimes you're the bug. Smith & Wesson didn't really work out, but is what it is. All right, now, Adobe. Now, we're bullish this Adobe call spread heading into earnings. Long the January 20th, 105-110 call spread for $2.42 net debit. Max profit with Adobe over $110. right now the spread's right where it was yesterday, about 242. So we still have to wait because Adobe's not going to report earnings until after the market closes on Thursday or tomorrow. So we're not going to get anything out of them until then. With this, we have another month. So I'll bring this one up next week when we do a review video, and we'll talk about what happened with the earnings and such. So you just got to wait. There's nothing to say. But now here on Oracle, we have that bearish call spread on Oracle. Short the December 42.50, 43.50 call spread for a 13-cent net credit. Max profit with Oracle below 42.50. Spread still at 13 cents right now, right where it was yesterday. And again, you'll see on Friday because Oracle is going to report after the bell tomorrow, but there's only one day. So my suggestion is depending on where this thing opens. So if there's a huge gap to the upside, then you and it gets up. If it's above 43.50, pretty much, you want to just go ahead and rip it earlier on in the day. Whatever you can cover it at, just cover it at, okay? And cover the short side of the call early on, okay? All right, now, and then just let the long side run because it might keep running the rest of the day. Now, if it gaps down, we're golden. And if it just opens kind of where it's at, we're golden too. So really the only strategy you're going to need to have is on a huge gap up, close out the short end, let the long end run, okay? So that's what I got going on here for our The Good, the Bad, and the Ugly review. Be sure to send me your recommendations or your suggestions, rather, of what you want to see next week. We are already going to cover Nike. We're already going to cover Micron. So send those to livetrader@zacks.com. Everybody have a fantastic weekend, and I will see you all next week. Have a good one.